corrected a bit, but I think as far as green energy is concerned, the important factor to keep in mind is that the upfront investments tend to be on the higher side, and once the execution is completed, then you tend to have a very strong payback. That means the EBITDA margins can be in the range of 70-75% plus. Because in the case of renewable projects, typically you tend to incur all the costs upfront, and once the execution starts, then the operational costs tend to be on the lower side. So my advice will be that keep the faith and stay invested. Do not make any fresh exposure at this point of time until we get some more clarity on the execution. Wait for the quarterly results, see the quality of the results, see the quality of the management commentary, and then take a decision whether you want to add some more quantity.
All right, that's the view coming in on Dani Green. The next question is from Deepika, who's from Hyderabad. She's bought Cipla 67 shares at 1459 a piece, and she wants to know whether she should keep holding it or sell. Kush, I'll come to you for this one. Yesterday, HSBC had a target of 2230 for Cipla. No, I think it was 1755 for Cipla. Your view as to what should be the target and what should be the stop loss for this counter?
So, bit of a downtrend on this one, and any attempts of recovery have also fizzled out. The volumes on the downside are still stacking up. So my suggestion is that you should hold on to this one, but with a very strict stop loss of 1400. Now that's the medium term support zone, plus that is also the recent low that the stock has made. So any breach below that could perhaps open the lower levels of 1320 as well. But any kind of sideways consolidation from here on, after this kind of drubbing, could perhaps trigger a short covering rally as well. So 1400 would be my stop loss. On the way up, I think the stock could meet resistances near the 1510 mark, where the 200-day moving average resides. But once that is taken out, you're looking at the 1550 kind of move. So hold with a stop loss of 1400.
We've got a caller coming in from Bengaluru, Swaminathan, calling us. Good morning, Mr. Swaminathan. How can I help you today?
Good morning. This regarding Tamil Nadu Newsprint and Paper Limited.
Okay.
I'm holding around 500 shares at 162 rupees. Wanted to know the target for medium to long term.
Okay, and how do you define medium to long term? Are you talking about more than a year or less than a year?
More than a year.
More than a year. So, and help me understand, you bought it not too long back, is it?
Yes, recent
buy. And what attracted you to this company, sir?
Because they are unique about that raw material. They are using Bajaj as a raw material.
Yes.
And they are, even though it's a state government company, they are professionally managed. And strategically located for the raw materials. I thought it's a good initiative.
Yes, absolutely. I'm glad that you've done your reading, Mr. Swaminathan. In case you were wondering, I'm talking about everybody else, what this company does, it's a paper mill, and it uses, as Mr. Swaminathan just pointed out, bagasse, which is sugarcane residue. And it's an interesting raw material. As you know, that there are a lot of sugar producers in the country. Sugarcane is quite a commonly used crop. And so, therefore, using that residue is an interesting strategy. Nirav, on the fundamentals, what do you think about this particular counter as part of the paper group stocks, as the paper stocks?
Yeah, typically the paper group stocks have been under a lot of pressure. We've seen the raw material prices have been on a tear, and demand has been pretty much subdued. So we've seen a lot of players like JK Paper or West Coast Paper or Sirpur, which have been struggling. We've seen the share prices also under a lot of pressure. But I think this particular company has got a stable balance sheet. They have good fundamentals, and as you rightly pointed out, the use of bagasse is a positive. So hopefully, I think the margins, they'll be able to hold on to their margins. The demand, of course, continues to be an issue, but I think relatively they are better placed as compared to the other paper players. So I think hold on to the stock is the recommendation.
That's the view coming in on Tamil Nadu newspapers. Now, the next question is from Sampath, who's from Coimbatore. And Alex is written his kind words for us. He's saying, I'm a big fan of NDTV Ask Profit program. And he's also said that my favorite analyst is Kush Bora. And his query is to you specifically, Kush. He's planning to invest a lump sum amount of 10 lakhs. But his time frame is 5 years, so I'll go to both of you. If you have a view, of course, for the next 5 years, he wants to invest in 5 stocks which are small case.
Small cap.
Yes, sorry, small cap. And 5 years is his time horizon. So Kush, if you have the 5 stocks for him, go ahead.
First up, this is turning out to be my favorite show as well. Has been for a while.
Thank you.
Even for all the love that I keep getting on, this show and all the comments that I keep getting, on this show. So for sure, I mean, one of the shows that I enjoy, and thank you so much for, calling that out and saying, I'm a favorite analyst. Thank you so much, made my day. No, now I understand that, he's got a very specific preference as, small cap. But my sincere suggestion would be to not perhaps focus so much on, the small cap side of things. There is a lot of room on the upside, but, there's fair degree of volatility as well. So hence my suggestion would be to have a fair mix. Now, what I would suggest is a mix of, as I said, the market caps. HDFC Bank from the large cap names has actually not performed for the last 4 or 5 years, might do so. So that is one stock. Emphasis, Skipper, RVNL, and Previous Speciality. These are the 5 stocks. Some of these will fall under his category of small to medium cap, but I'm still including a large cap just for capital protection perspective as well. Plus, I do believe that HDFC Bank from here on will actually start outperforming once that is broken above that 1750, 1800 zone. So just to repeat for his benefit, HDFC Bank, Emphasis, Skipper, RVNL, and Previous Speciality. These are some of the stocks that I would recommend. Incidentally, these are also the stocks that we had recommended as Diwali picks. So we could very well continue to invest in them, or maybe start with these, not as a lump sum maybe, but get started in a more SIP mode. That's what my suggestion would be.
Those are the 5 picks for Kush. But Nirav, if you had to pick 5 stocks for the next 5 years, what would they be in the small cap space?
Not exactly the small cap space, but I think we've been focusing on certain stocks which have given a good outlook for till 2030. Some of these stocks are talking about doubling their revenues or tripling their revenues. So I think we would recommend those stocks. We would like to focus on stocks like Praj Industries, Piramal Healthcare, Indian Hotels Company Limited, Varun Beverages, Jubilant Foodworks, and Sirca Paints.
Oh, interesting spread. Thanks so much, Neera, for that view. Let's take the next question, and this is a question on Jupiter Wagons. And we've got Srinivasa, who's bought at a price of 563 months back. The stock is currently trading at 566, so not too far away from his buy price. He's asking what levels he should watch out for. So on the charts, Kush, what is the kind of recommendation that you would have?
Incidentally, Alex, from the railway pack, Jupiter Wagons and TexRail, these have been the 2 stocks that we've been recommending for the last month or so. It's seen quite a jump already. So my my view here is to exit. He's been holding on to this for some time now. I'm assuming he would have bought it somewhere close to July, August timeframe, and very patiently held on to this one. So close to his buying price, he might actually want to consider, a gradual exit, if not a complete one. Now, 575, 580 is the zone where the stock will actually see some sort of resistance, and that's exactly what we've seen today as well. If that is taken out, in this current leg of rally, then the stock could head to 625. But it's not a bad idea to start lightening your positions because 1, you've held it for a long time, and 2, the stock already seen quite a bit of spike in the last trading session, especially yesterday. So exit partly, you could hold the rest, for targets of 625, and now your stop loss should come somewhere close to the 540 mark.
Okay, that's the view coming in on Jupiter Wagons. We have our next caller, Sriram from Chennai is calling us. Thanks for calling, Sriram. Good morning. How can we help you?
Hey, good morning. This is my call for this week. I've been calling every week and getting a lot of great advice from you all. Thank you so much for this show.
Thank you for the kind words, Sriram.
Yeah, and my question today is about Vedanta steel. I've been watching this stock. I don't have it now,
Okay.
but the steel sector going up and down with China's impact going up and down. But the dividend payment of Vedanta doesn't stop. At least on an average 10% a year they give us a dividend. So is this a good time to enter? What is the outlook of the stock for a hold of 1 to 2 years or even more?
Okay, your question is crystal clear, Sriram. I'll quickly go to Nirav. Nirav, your view on Vedanta, is this the right time to enter and keep holding it for the next 2 years?
Yes, I think as far as the dividend is concerned, I think already rupees 35 has been distributed by way of dividend in this year. Three dividend payments have come, aggregating rupees 35. And we have a board meetings which is scheduled on 16th of December to consider the fourth dividend payout, which could be in the range of 8 to 10 rupees. So I think that is one story, plus the businesses and the potential restructuring plans, etc. I think asset-rich company, cash-rich company, and with the metals cycle showing signs of some recovery and improvement, I think definitely it remains hold from a medium to long-term perspective.
Okay, Sriram, hope that answers your question. Certainly something that we've been watching as well, right? Because you're talking about the global entity for which you've had the domestic entity that has increased dividend payments. That's something that a lot of analysts have been watching very closely. Of course, Nirav alluded to that as well. Shailaja from Hyderabad is asking about another rail stock. We've got Tagar wagons, which she wants to know about, and we can pull up the weekly chart for Tagar wagons because I just want to know how it's moved. She's been trying to or thinking of buying over the last 2-3 days, and unfortunately she's missed a pop in the stock. It's up about 10% or thereabouts in that time frame. Based on the charts, is this a good entry point, Kush, especially considering the kind of move you've seen over the last couple of days?
Alex, very similar view as I mentioned for JWL, where what's happened is that some of these stocks have had a fairly decent run over the last 2 months or so. The base is in place, but the spike that had to come for this rally, or the breakout that had to come for this rally, incidentally came in yesterday. Now it will not be a bad idea to buy some of these on declines, because just like JWL, Tagar is also close to this resistance zone of 1350. Again, very similar high levels, and we've seen some profit booking thereabouts. So anywhere close to the 1275, 1280 zones should be a good buy. I'm not saying the rally is done and dusted for these. It's just that with the kind of moves that we saw yesterday, these could come in for some sort of a profit booking, and buy on dips should be the strategy for both of them. Well, that's a beautiful graphic that you've put of Tagar wagon and JWS. So kudos to your team on that. So anywhere close to 1275, 1280 should be a good entry opportunity for Tagar Rail. And on the upside, you could aim for targets of 1370 and 1450. So buy on dips is the recommendation for Tagar Rail.
Yeah, I'm going to add my congratulations to the team as well. As you know, we have the best team in the industry. We have to slip into a very quick break. We've got more on the other side, so do stay tuned.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. You're watching Ask Profit, where we get all of your questions on stocks answered, whether it's short-term fundamental or indeed long-term or short-term technical or long-term fundamental in nature. But we've got Viral, who is joining us from Mumbai, and he's got a very interesting question. Viral, thanks so much for calling us this morning. How can we help you? You've got Suzlon, right?
Yes, I do. Good morning. So I have Suzlon. I hold about 200,000 shares of Suzlon. And I bought it at about 7 rupees 50 paisa a share.
Okay.
And I want to know actually the future prospect in terms of numbers, as in, what price target can be achieved in the next 2 to 3 years based on the orders received and based on the technicals actually.
Okay. So 2 questions for you, Viral. First, what was the thinking? When did you buy this? And what was the thinking that when you bought it?
So I bought it just before the rights issue had come, about a year and a half back. So I bought, actually it's a different story. I bought 100,000 shares at about 10.5 rupees. And then I applied for rights issues, where actually I was entitled for about 23,000 shares, but I applied for 1 lakh more. And I got the entire entitlement. So I got about 2 lakh shares at about 7 rupees 50 paisa.
Wow. Okay. And what about the holding in this much time, right? So because you've seen a tremendous value appreciation, it has hit levels of about 80 plus, right? At that point, you didn't feel like selling?
No, not at all, because it's just stabilized, I would say, at 70, 80. This range is basically, they paid up their debts, they cleared their books and things like that. So this is basically a very, very basic price, I feel.
Okay.
The growth is now going to start. Until now, the growth did not start. They cleaned up their books.
Okay. Yeah. So Viral, you're making gains of 1 crore, and I'm spending a little time on this because I want to make absolutely sure that we give you the right advice. Is this a significant portion of your portfolio, or is this a reasonably small portion of your portfolio?
It's not very big. It's an average. It's a medium
fair
portion of my portfolio.
All right. So there's no worry of concentration risk in your portfolio. With that in mind, let me get this question answered by Nirav. Nirav, on the fundamentals, as you can tell, he's making quite a bit of gains and he's held on. So kudos to him on this. Based on the fundamentals, so how does it look for the next 2 to 3 years?
Yes, I think full marks for holding on to the stock, for identifying the stock at the right time, holding on to the stock. And the advice will be to definitely hold on to the stock because as you rightly pointed out, the balance sheet has been cleaned up, the debt has been cleared, and execution is picking up. This is the most important part. Execution is picking up, so that will start reflecting in the revenues. We will slowly start seeing the margins also improve and the cash flow will also improve. So I think the advice is definitely to hold, and the stock can easily be a doubler from these levels in the next couple of years.
Stock will be a doubler in the next couple of years. So it's 65 right now. 130 is the target price given by Nirav.
Viral can maybe send us some coffee in a couple of years.
Yeah.
Viral, that's the least that you can do. Thanks so much.
Definitely. Yes.
Yeah. Thanks so much for calling us.
Yeah.
Right. Thank you.
All right, the next query is from Dr. Tagar, who's from Bhubaneswar, and he's holding 100 shares of Asian Paints at an average price of 2830, and he's been holding this for more than 2 years now, and he wants to know as to what should be the next course of action. Coach, I'll come to you for this one. Paint sector as a whole fundamentally is seeing a lot of pressure. Asian Paints specifically, first half has not been very well, but how does it look on charts?
Exactly as your tone sounded. I'm not so encouraging you. There have been attempts of revival, recovery. We all know what kind of a story Asian Paints has been, but that's up until the last couple of years, right? So any kind of a revival attempt has been, thwarted. So my suggestion is to exit from this one, even if it's at a loss. because all the medium-term support zones have been broken and the stock is falling with fairly heavy volumes despite already having seen a drubbing from those 32,000-3,500 kind of levels. So exit Asian Paints, you could perhaps switch to something as we said, HDFC Bank, if you want to stick to the large caps. Reliance also after this kind of correction has started to look attractive. So if you want to stick to the large caps, maybe these are some of the names you could consider. But Asian Paints right now is an exit.
I believe we have a caller named Sanjay from Surat, and he also has a query on Asian Paints, and he's bought it at the levels of 600. So Sanjay, I hope we've answered your query on Asian Paints. Kush suggests that you should shift to an HDFC Bank. Yeah. So
let's find out what he wants to know.
Definitely. Sanjay, if you're online, can you tell us what do you want to know about Asian Paints exactly?
Yeah, actually, I want to add more. If I have been advised, I want to add more. This juncture.
All right. Kush, do you think Sanjay should add more? What do you think? Because he's bought it at the levels of 600. So he's sitting on significant profits.
I could understand the attachment, if I can call it that he would have with this, because he's bought it at very attractive levels and held it for some time now. Now, because his query is very specifically about whether he should average or maybe he should add more or not. My view is to perhaps not add any an exit part if he does want to. My suggestion would be to wait and let the stock rebound. If you see, somewhere about 16, mid-September, 16 September, that's where the stock has started falling from, and you've not had a single weekly close above the previous, high or the previous close. So that is where it gets a little tricky for me. So my suggestion would be wait for the stock to rebound and tell you that the selling indeed from the near-term perspective is complete, and then that's when you should go and add. Otherwise, you would go out and buy now and perhaps find the stock 5-10% lower in another month's time. So add on a rebound if at all you want to. But my first suggestion is to perhaps stay out of this one, from a near to a medium-term perspective.
Nirav, I'll quickly come to you on this one. With the kind of competition that Asian Paints, Berger Paints are facing because of Birla Opus's entry, do you think this is the right time to enter Asian Paints?
No, I would stay away from the stock. In fact, in the particular case, my advice would be that if you are holding the stock of Asian Paints from 600 levels, it is better to take the profit and invest it into three parts. One part goes to Garasim, the second part goes to Kansai Nerolac, and the third part goes to Sirka Paints.
All right. So, and I'm glad that you've gotten a comprehensive view on this one. I hope that answers your question on Asian Paints. And I think a lot of people have this question for stocks that traditionally have been buy and hold and fill it, shut it, forget it strategies. Some of those are not panning out right now. And so therefore you react to it. Hari is calling us from Chennai. Hari, good morning to you, and how can we help you today?
Hi Alex, good morning to you, and it's very pleasure talking to you.
It's my pleasure as well.
Yeah, thanks Alex. Yeah. Alex, I have around 75 Dr. Reddy, around 1,325 or the average prices. So I am a long-term investor. Considering the stock fundamentals, I see I just would like to know whether I can accumulate at this price or whether this Biosecure Act has any direct impact. Say any of that act is not coming, but how this stock will react in future, maybe down 2 to 3 years kind of any pharma stock. Yeah,
I understood, Hari. I got your question. So you bought based on the fundamentals. You're a long-term investor. Let me go to Nirav on this one. Nirav, some of the issues that have been faced by the sector, by these companies, have not gone away. There is still a question about pricing. There are a few question marks about how this Biosecure Act is going to come through. We saw the negative news that came out not too long back. Would you hold on? Would you add more? Is this the best pick in the pharma space?
No, I would not want to add any stock at this point of time. I think first there is a need to have a clarity on what happens with respect to the US Biosecure Act. And of course, there is, as far as generics are concerned, there is pricing pressure in the US. So I think taking into account all these factors, one, it is important to concentrate on those pharma companies which have a domestic presence, because the domestic markets have been doing pretty well. So I would overall still I think I would be cautious on the pharma space and would not want to increase exposure at this point of time.
All right, we have our next caller. Kiran Kumar is calling us from Karnataka, and I believe, Kiran, you have a question on Syngene International. How can we help you?
Yeah, I hold Syngene International at the price of 450.
Okay.
Quantities of 450.
Mm-hmm.
So is it the right time to add more shares?
Okay, what is the time horizon that you're looking for?
So I'm looking for long term.
Long term,
Like,
okay.
yeah.
Okay. And what was the kind of intention behind buying Syngene International?
Like it's been a long holding for me.
Okay. All right. Neerav, I'll come to you on this one since you already talked about. I'm not sure if Biosecure Act also affects Syngene, but your view on this counter?
Yeah, it doesn't affect, but I think Syngene has been a slow and steady mover. So I think based on the experience, of course, you would know how it has moved over a period of time. But I think this is not the right time to add any fresh quantity at this point of time. Wait for a correction. Hopefully, you will get better levels to enter in the near future.
All right. So I'm guessing generally a negative view or not a positive view from Neerav on the pharma space. So wait and watch. Bajaj Auto, the next counter that we're talking about. This is a question from Anuradha, who's writing to us from Andhra Pradesh. She's bought at levels of 9,025 and she's looking for a 6-month view. If I'm not mistaken, she's doing reasonably well, right? Let's pull up the chart and see where it's currently trading. Okay, actually, it's come off quite considerably from that point that I was talking about. It had reached 10,000 plus levels. What's the view on the charts, Kush?
Not too encouraging, Alex. The stocks actually had a sharp knock, as you rightly pointed out, and is now trying to form a base around that 9,000 mark. This could also be a technical factor, and this could also be a factor from a derivative perspective, where you will typically find supports and resistances around these round figures, right? So 9,000, since this is active in the F&O space, the 9,000 put has a fairly decent base that is also acting up now. So my suggestion would be to book out of this one. I know the view is for 6 months, but the kind of downturn it has seen and the kind of volumes that it is seeing on the downside even now aren't really encouraging. So I would suggest to book out of this one. Stay with stocks or sectors which have a trend and momentum going for them. Not too many bright pockets in the auto space right now. So I would suggest exit, especially because it's not too far away from her buying price. So the so the loss isn't really as big just yet. So an exit on Bajaj Auto for the time being.
The next query is from Sumit, who's from Bangalore. And one more compliments for us. He's saying your channel rocks and anchors are top class. So thank you so much for that, first of all, Sumit. Now he's seeing that he's bought Marathon. I believe this is Marathon NextGen Realty. And he's bought it at 627 a piece and 750 in quantity. And he's kind of incurring losses right now, and this he's saying is because the MTF, which is adding pressure due to interest paid every day. I believe, okay. I think this is a technical query, and he's suggesting he wants a strategy for the next 2 to 4 weeks. Kush, do you have a view on this? How does it look on charts?
Even before that, this is precisely why I'm not in favor of leverage trading, especially the one that you've got to see the interest payment, debit entries practically every day, on your accounts. So not a big fan of those, should not be, a good idea for trading. If you are, a skilled derivative trader, then perhaps futures, but otherwise, just good old cash, investments or positional trading in cash is a better bet. That's from a generic trading strategy perspective. Now, as far as the stock goes, it's seeing some sort of a consolidation. The broad range is 635 on the upside and on the downside 580. Not got a lot of great deal going for it. After that spike, it's got this profit booking come in. My suggestion would be exit from a technical standpoint as well. Also from the standpoint that he's incurring interest cost on a daily basis because of the MTF. So a Marathon for now, from at least a 2 to 4 week perspective, is an exit.
All right, we've got a next caller from Kerala. Baby John is calling us. Baby, how can we help you today? Good morning.
I am having 5 shares of PTC Industries. bought at the rate of 12,000 rupees.
Okay. And
I would like
what would you want to know about this?
know the prospects of the company.
Yeah. For
And the
what period of time, sir?
Prospect.
Long term.
No,
Okay.
no, it's long time. It is more than 3 years.
More than 3 years. Okay. So let me take your question to Nirav on the fundamentals. The stock that is currently trading at 11,766 below the buy price. It's had quite the run in the year so far, 78% up at this juncture. Would you suggest holding on? He's got 5 shares. Would you add more? And what are the prospects on the fundamentals?
Sorry, Alex, I did not get the name of the company.
Apologies. We're talking about PTC Industries.
PTC Industries.
Yes.
Yeah. So, so I think the stock has run up quite a lot. It's run its course. As you rightly pointed out, there's been a sharp appreciation. So I think it's better to take some profits, book some profits at this point of time. And enter maybe at lower levels.
Apologies. If you are seeing a loss though, Nirav, because he's bought at levels of 12,000 and the stock is currently below his buy price, would you book out and move to something else?
Yeah, because there's been a sharp run up. So I think it's better to exit at this point of time.
Okay.
All right, that's the view coming in on PTC Industries. The next caller is Pradeep Kumar, who's calling in from Kerala. Pradeep, hi, good morning. Thanks for calling. How can we help you?
Good morning. How are you?
Good. I'm good. How are you?
Thank you so much. I have, I'm keeping the share SBI Life.
Okay.
So I would like to know now, in reason is going to 17% of loss right now.
Mm-hmm.
So I can, rebuy to maintain the average or sell it. Yeah, that's a question from me.
Okay, I believe you're holding 1,000 shares bought at 1740 a piece, right?
Correct.
Okay, and what's the kind of time horizon that you're looking forward to keep being invested in this counter?
Yeah, but I think, I already lost, I don't know, I don't think so it's a big loss, but it's a 17% right now.
Okay.
But the best thing, in the right position, I really want to know, it's rebuy to maintain the average or to sell it, or, I don't mind to keep a few more months. Okay. I don't really care.
Few more months. Okay. Kush, I'll come to you for this one. I know averaging out is not an idea for you, but should he exit or should he keep holding?
May not be a bad idea to exit right now. The stocks is in a very steep downward sloping channel. We got a breakout of that for, over the last 3 odd sessions when there was a rebound. But you'll see that, that fizzled out and that failed around the 20-day moving average. So, any kind of a revival attempt in this stock is now being taken as a very quick opportunity to, exit, by the investors. So my suggestion would be to exit because the near-term selling pressure will also remain. When does a turnaround come? It's a little difficult to, put a time to it. But from a price perspective, above 1,500 is when the stock could see any kind of a hope of revival. Up until then, I think the stock would consolidate with, this negative bias. So, why do you want to hold on? So my suggestion would be to exit from, SBI Life.
Speaking about another life insurance company, and this is Life Insurance Corporation of India, we've now pretty much covered the entire gamut, right? We began the show, I believe, talking about HDFC Life. Vijay Mahajan, who's writing in from Delhi, is bought at levels of 1,040 in September of 2024. Let's pull up the charts and see where it's currently trading. He is incurring a loss right now because the stock is currently trading at 938, but not a very significant drawdown from the price that he bought it at. He's got 100 shares and he's looking at holding for the next 1 to 1.5 years. So it gives me enough time, I think, Nirav, to go to you on the fundamentals. How does it look on that front? Do we see an improvement in the fundamentals? And from that perspective, would you hold on at levels of 1,040?
As far as the recent numbers are concerned for LIC, it was a disappointment. So the stock has come under some pressure. And I think my advice will be to exit from this and go to a better option. I think as we discussed, ICICI Pru is there or HDFC Life. These could be better options. So it's better to switch over to better options.
That's the kind of insight coming in on LIC. The next query is from Rajiv, and he's from Mumbai. He's bought 800 shares of Latent View at 475 a piece and 1000 shares of L&T Finance at 140 a piece. And he wants to know as to what will be the medium target for this, and how are both of these stocks technically looking on charts. Kush, one by one, Latent View and L&T Finance.
Latent Views has had a very good recovery. It was facing that 200 DMA resistance for the past 2.5-3 months now, probably a little more in fact. But yesterday, day before, the kind of move that we saw on the back of very strong volumes has put it comfortably past that level. So my suggestion would be to hold on to Latent View. On the upside, you're looking at 540 as the next target, and once that is taken out, the 570 as well. And now the 200-day moving average, which was acting as the resistance, will act as a support. So just under it, close to 490, 485 should be your stop loss on Latent View. As far as L&T Finance is concerned, this stock is also attempting recovery, but the volumes on this one aren't really as encouraging. Plus, the 50-day moving average is acting as a bit of a resistance. So while this is a hold, this could lack momentum for let's say another couple of weeks. So my suggestion here would be to keep a stop loss close to the 143 mark and continue holding L&T Finance. But the momentum that is missing could come once the stock crosses the 152 level.
All right, we've got our next caller all the way from Dubai. Shoaib is calling us. Shoaib, first of all, good morning to you, and thanks so much for waking up early to log on to this program. How can we help you?
Yeah, it's very good morning. It's a long time I'm trying to connect you people.
I'm glad that we're getting to speak today. Yeah. Oh, thank you so much.
Okay, I used to, because my circle, everyone used to watch NDTV on the regular basis.
Absolutely.
It's nice to meet all.
Thanks so much. How can we help you today?
Actually, I'm holding Heidelberg cement.
Okay.
My buying rate is around 210. I'm holding around 6,000 quantity.
Okay. And you bought it for the long term, Shoaib?
Yeah, it's for the long term. I'm not bothered about the short term. I can keep it like 5 years, 10 years, no issue.
Okay. All right. So basically the question is this the best buy in the cement space? And so from that perspective, let me go to Nirav on the fundamentals. Nirav, quite a bit of consolidation taking place in this space, capacities being built up, acquisitions taking place. So is this the best buy in the cement space?
Not exactly the best buy, but a small company, but nonetheless a very, very disciplined company, very, very good balance sheet. But no expansion happening on the business side. So, but they've been doing fairly well. So I think companies which are in this space could be good M&A targets. So we are seeing good action which is happening in counters like Star Cement or Heidelberg Cement, or at the same time Prism Johnson. So I think as far as Heidelberg Cement is concerned, the stock price has been in a very narrow range, moving from 210 to 240 levels and then back to 210 levels. We'll really have to wait for any M&A activity to happen to see any meaningful appreciation in the stock. So I think that to my mind is the only way out for any potential capital appreciation in the near future.
Right, that's the view coming in on Heidelberg Cement. The next question is from Richie, who's from Kerala. She wants a suggestion in terms of technical perspective on Samvardhana Motherson. She's holding 600 shares, bought at 1611 a piece. The time horizon is 6 months. Shall I hold on to it or not? Is her question. Kush, your view on this counter?
Definitely a base formation attempt in place on this one, and right now seems to be struggling near the convergence of the 200 and the 20-day moving average. So could continue to hold, because after the kind of sharp fall that it has seen, there's finally this base formation with a mild uptick and a positive bias on this. So can continue to hold. My stop loss on this one will be close to 158, the recent low that it had made. Once that is breached, then this attempt of recovery could very well fizzle out and might turn out to be a false recovery. But if that is held and the stock continues to move higher, then you're looking at targets of 183 and past that even 200 on the higher side from a 6-month time frame perspective. So risk reward ratio is extremely favorable. Hold with a stop loss of 158.
On the program to go to rapid fire, and this, Nirav, since you're joining us for the first time, is where we throw as many questions at you and Kush over the course of 2 minutes. Do try and answer in as brief a manner as possible. So let's start with a question on Tata Technologies, and this is a question from, I believe, Sandeep from Gurgaon, and he's asking, since it's gone below the listing price, should you hold on?
Yes.
Okay.
Hold on.
Yeah.
Okay, the next query is another Tata counter, Tata Motors for the next 3 years, Nirav.
Avoid.
Okay, this is Govind Bhatia's question. IRFC bought at levels of 80. Should you book profit or should you hold? Kunal, what's the view?
Kush, the view is stop loss, trailing stop loss at 155.
I got it wrong again. Sorry, Kush.
The next question is on NTPC, bought at 210, 80 is the quantity. Kush, how does it look on charts?
I think you should hold with a stop loss at 354.
Yeah. Okay. All right. The next one's on Zomato, I believe. So after this latest Tez update, is it a negative? A lot of people are asking this. What's the view, Nirav?
Well, in the short term, it could be a negative, but I think the long-term prospects remain quite strong.
Okay, Bank of Baroda is the next counter. Ishant is asking whether he should hold, sell, or what should be the target price. He's holding 2,500 shares. Kush?
Hold, stop loss comes in at 249. The target on this one is 275 and 290.
Okay, carbon black players. Pratiksha from Muscat wants to know about Philips Carbon and Birla Corp. Investment for 2 to 3 year time frame. Would you buy, Nirav?
Yes, definitely. PCBL wants to increase their profits 5 times in the next 5 years. So they've given very aggressive guidance. Yeah.
All right. Karthik from Hyderabad has bought 120 ITC shares at 467 a piece. Can he buy more for the long term? Nirav, your view?
No, not to add at this point of time.
Okay. Unfortunately, we're completely out of time. Kush, Nirav, thanks so much for joining us. Kush, apologies for getting your name wrong again. This is force of habit. When I'm not actively thinking of your name, I get it wrong. Apologies. I will promise to work on it. Thanks so much for joining us, and always appreciate you taking the time. We're completely out of time on this edition of Ask Profit. Thanks so much for joining, and hopefully we helped you over the course of this 1 hour. We've got Know Your Company up next, and it's an interesting one to watch. So I'd encourage you to stay tuned. This is NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Long Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you see.
Hello and welcome to KYC, a brand new show at NDTV Profit. In the fast-paced world of stock markets, investors are bombarded with information, but what they often lack is a deep, comprehensive understanding of companies they invest in. KYC, Know Your Company, is a show designed to give you, regular investors, powerful, actionable insights into the fundamentals of a single NSE-listed company every day. And today, we talk about Ceigall. Now, this is another one of those recently listed companies in the capital goods and infra space. And in fact, the focus is very much infrastructure and construction, where the company, in fact, specializes in structural work specifically. If you actually take a look at all the things that they've done in the past, they are mostly into elevated roads, flyovers, railway bridges as well. But besides that, they're also looking at overbridge tunnels, highways, expressways, as well as runways. So very much into the road sector and the segment, and even in terms of the way the revenues come through. When it comes to the breakup, well, you have a majority of your revenues coming in from road, highways, and flyovers. In fact, 83% of them coming in there. And the balance will be around tunnels. Railways and metros do, however, form another 13% of their overall revenues. So this is what the company does. We thought that it's an interesting company because it's recently listed. It's a relatively smaller company as compared to what we have been used to when it comes to companies in this particular sector. So, on that note, let's start off with the ratings. And for that, I'm also going to get in my colleague Anushi, who joins us to perhaps take us through the same ratings that we're going to talk about. And in the ratings, of course, we talk about the income statement, the kind of growth that we've seen, the balance sheet, cash flows, as well as shareholding, and among other factors which will be in focus. We talk about the order book positions, return ratios of the company, peer comparison, and street credentials. Anushi, welcome and thanks for joining in. Why don't you take us through how the company's growth has been over the past 3 years?
Of course. Agam, let's see how Ceigall has done in terms of its growth. We are seeing a strong trajectory in terms of revenue, around 51% of a CAGR growth in the last 3 years. Well, this is quite an impressive growth number that we are looking at. FY24, they had clocked in a revenue of 3,029 crore. And do note for the FY25 year, they are maintaining a 15 to 20% of a revenue growth guidance. If you look at EBITDA, there has been again a 48% of a CAGR growth that we are looking at. This is with FY24 number coming at 518 crore. in EBITDA for EBITDA margins. They've maintained their EBITDA margins at 17.1%. So for FY25 though, they have their margin picture looks in the range of 12 to 12.5%. Coming to net profit, 38% of a CAGR growth with FY24 revenue standing at about 304 crore. So solid trajectory that we are seeing in the last 3 years.
Right. Well, that's as far as your income statement is concerned, and it's been very strong, as Anushi's pointed out. But how is the balance sheet looking? And this is another one of their relatively stronger features when it comes to the company. So, firstly, they've seen a significant bump up in net worth. But we must remember that the company has been recently listed, which means that its balance sheet, of course, will have expanded on account of the listing. But that said, as far as its gross debt is concerned, that remains largely stable. We must also remember that because it's an infra company, it does have a relatively higher amount of working capital requirement, which means that your gross debt will remain stable. But if you consider it and compare it to the net worth, it's a very favorable debt to equity ratio. And not to forget, if you actually consider the cash balance, in that case, that ratio becomes even better because, of course, based on FY25, the first half, we're looking at a cash in bank of around about good 564 odd crores. So it's certainly an improvement in the debt to equity ratio on a net basis as well. So a pretty stable balance sheet as well in this case. But how are cash flows looking, Anushi?
Agam, you just pointed out with most of these infra companies that we speak about, there's need of higher working capital requirements. And with how the first half is panned out, there was an uptick that we've seen in terms of receivables and payables because of these kind of working capital requirements and elections also accounting for that. The cash flow from operations for the first half, you're looking at a negative figure of about 305 crore for the first half. This is in comparison with a positive 15.5 crore of a figure. But do note that if we look at the last 3 years number of the cash flows, they have been on the negative side. Net cash flows, if we see that, have been at 197 crores. So investing and the other aspect has aided in this uptick that we are seeing, which makes up from what the losses in the cash flow from operations. H1 FY24, the number was at minus 15.2 crore. But this was a negative number that we are looking at. So this is the overall cash flow numbers that we are looking at. But let's also address the shareholding pattern of the company as well, Agam.
Right. So Anushi recently listed. So of course, it's the promoter holding stands at around 82%. Now we must remember that as per SEBI's shareholding norms, this number of 82% eventually has to come down to 75%. The question really is that where does that balance go eventually down the line? But for now, as you can see, it's very tightly held between promoters and, institutions, looking at another 6% odd together, DIIs and FIIs. That leaves about 12% with the outstanding shareholders, the retail shareholders, if you like. Overall, it's a tightly held company, which is why it's a thumbs up. But as I mentioned, the only overhang in this shareholding could potentially be that eventually this 82% will have to be brought down to 75% as per SEBI shareholding norms. But overall, given the fact that it is still very tightly held, it would be a thumbs up as far as the shareholding is concerned as well. But what's the next factor on your list, Anushi?
Order book position for majority of infra companies is something that we should be watching out for, as this determines the revenue growth ahead for these companies. So if you look at the order book, that stands at about 12,153 crore. Now, if we take this into consideration of the FY24 revenue picture, we are looking at almost a 4x of a book to bill ratio. So this provides further medium to long term of revenue visibility for the business going forward. In terms of order inflows, they've clocked in about 2,500 crore of order inflows. So overall, a healthy picture that we are looking in terms of order book and order inflows, Agam. But let's also talk about the return ratios.
And very strong return ratios, surprisingly. We are looking at well over 30% return ratios, 33%, 33.6% precisely for FY24 on return on equity. And if you consider the return on capital employed, again for FY24, that is also above the mark of 30%, 32% to be precise. Now, a thumb rule of sorts is anything above 20 to 25% is strong, which means that leaves Ceigall India with a very strong foothold as far as these return ratios are concerned. The real question is that do these return ratios change through the course of the time? That only, of course, we will know eventually down the line, a couple of quarters down, we will have the annual numbers. But for now, it certainly is looking very, very good and very strong as far as the return ratios are concerned. But what may also be a concern is its valuations, Anushi. What can you tell us here?
Before we go to the valuations, let's talk about how the valuations are in compare with the peers, if we speak. So Ceigall in India, if you are looking at the current FY24 PE numbers, that stands at about 82 times. Now, comparing this to its peers, this is a significantly higher number that we are looking at. But do note what Agam pointed out when he was addressing the shareholding pattern of the company. 80% of this lies with the promoters itself. So with that, there is a scarcity premium which is also be taken into account. Along with that, we are looking at a 50% of a CAGR growth in the last 3 years of the company. So this high growth is also one of the factors which is leading to this higher valuations as we speak. So 82 times compared to J. Kumar, ITD Cementation and PNC Infra. I just want to quickly address PNC Infratech over here. 12 times is what its PE multiple is, but do know that the company is being banned to bid for further orders for the next 1 year. So there is also chances of PE derating in this case. So we should not account for this number just on the basis of its attractive PE valuations it is looking at. It's the fundamentals that should also be taken into account. But yeah, so this is the overall picture for Ceigall. Coming back to it, higher share premium along with higher growth that we should be looking out for, very important for the company to maintain this kind of momentum going forward as well in terms of valuations.
Spot on, Anushi. And again, as for reasons mentioned by Anushi, why we are looking at a substantial premium as far as its price to earnings is concerned. But let's talk about its performance for the stock. Now, so far, since its listing, it has, in fact, the share price has declined around 10%. We can't talk much about the dividend because, firstly, it is just recently listed. Secondly, growth companies tend to usually curtail their dividend dole-outs, and which is understandable because they do need to use that capital into your businesses. A lot of that could potentially be used for working capital. So wouldn't hold anything against the company if the dividend were to be less. But for now, we don't have data on that. And since listing, of course, we've seen, it come off to a certain extent. That brings us overall to the check in terms of the ratings with respect to the various parameters that we've spoken about the company. So a very strong basis when it comes to its income statement, on a very strong foothold when it comes to its balance sheet. Cash flows, again, understandably, which is why we're going with a neutral, very strong foothold when it comes to shareholding as well. So a lot of positives here as far as the company is concerned. In terms of the order book position, it gives you a good amount of visibility going forward, and that always bodes well with any company for that matter. And return ratios, very, very strong. So overall, if you consider some of the most important factors, the company actually is in a plus. And that's possibly the reason why you see the street giving it such a big premium to its share price and also as compared to its peers. So that also gives you an overall rating of a very good 5.5 to 6 out of 8. So there you have it. That's the way we're looking at the ratings here. But let's take this conversation forward with Bhagat Singh. He is the Group CFO of Ceigall India. And I'm going to request Anushi to stay back as well to perhaps, take this conversation forward with, Mr. Bhagat Singh. Mr. Singh, good morning, and thanks so much for taking the time out. Your company, as we've been mentioning, on a very strong footing in terms of your revenues. My first question will have to do with your order inflow for the balance of this financial year. Seasonally, we do know that this particular second half is very strong for the entire sector, and that's because a lot of the awarding activity picks up during the second half and particularly the fourth quarter. But there was a concern around the conversion ratio when it comes to the company. It stands at around 1:10 or about 10%. Can you tell us about how you are expecting the second half of this financial year to turn out when it comes to your order inflow? When I'm going to admit that your order book is still very strong, and so we already have very strong visibility. But what is your assessment here?
Good morning. and thank you for inviting us here. So as far as our predictions about the market is concerned, so we are expecting a good order book to arrive at in the last quarter of this financial year. Normally, it is a trend of the industry that during the NHI order books normally gets more substantially positive for the industry during the last 2 quarters. So we are expecting that the last quarter would be we will be able to receive a significant flow of new tenders from the authority. And as you rightly mentioned, that Ceigall India Limited is basically a leading infra player. So we have a decent order book of 12,000 crore plus. We have already 14,000 crores of or new orders in pipeline, which would be yet to open. And our order book to bill ratio as on December last year was 5+, and still we have an order book of 3+. So our order to revenue conversion ratio is significantly good. Last year we closed our financials at 4,952 crores, and this year we have guided investors with annual growth rate of 15 to 20%, which we feel that we would be able to maintain on the sustainable and a growth basis.
Hi, Mr. Singh. This is Anushi joining in. I'll continue with the order book question, the order book discussion that we've been making. Now, there was, if we look at the first half in terms of government activity, it was on the muted side with the elections taking place and other factors in consideration. Now in H2, there's discussion about strong capex revival from the government side. So with this, what is your assessment of the kind of order inflows that should be expected in H2? And where will this take your order book towards? And just wanted to understand on the execution part also. You've mentioned that you currently have about 15,000 crores of orders in pipeline. So if you can get, how much would that be converted as well? So if you can give an overview of all these factors.
It is needed to mention that infra growth is significant and must for any national survival, and same is India is not an exception to it. So I personally feel that the order book, which we are expecting to have a good number in the last quarter, it would be turned around more. We would be able to witness more towards metros, railway modernizations, water irrigation projects, new airports, aviation business would be on a more significant perspective. This is what I personally believe, and all these areas are a good significant revenue earning model. As far as Ceigall is concerned, so we have guided in the initial part of our year that we are expecting an inflow of 5,000 crores during this year, against which we have already received 3,774 crores of new orders from the authority during the first half. As far as the new second half is concerned, so as I mentioned that we have already bid 14,000 crores of new order, and we are planning to bid another 15 to 20,000 crore more. So until in the last quarter, we are expecting that a new order inflow of close to 5,000, 6,000 crores, which is making my order book to close to 17,000 plus at the year end. And as we discussed in the earlier interactions also, that our order book is well diversified into various sectors, be it EPC, be it roads, we are into railways, we are into metros, and the new order books which have been recently received, it comprises of 2 new HAM tenders from Ayodhya, for which we are expecting an appointed date in the last quarter of this financial year, which ultimately will make my order book to revenue ratio to a significant new level.
Mr. Singh, I understand that you're a growth company, which means that there are a lot of funds will go towards investments. But over the last 3 years, what we've seen is on a net basis, the cash flows are still in the negative territory. At any point in time, can we expect the net cash flows to remain consistently in the green?
Sir, I would like to rephrase your statement. At the outset, I would like to specify that the cash flow from operations on a standalone basis is positive. This is clearly visible from the standalone financial numbers of Ceigall India Limited, which are audited and in public domain. When you examine the cash flow statements of any infra company which has HAM assets, that you will find in the initial part of the years on a negative. The reason why the cash flows are negative, that needs to be emphasized upon. So under the HAM model, whenever you work for any authority, 40% you receive during the construction period, and remaining 60% the authority pays you along with the interest during the next 15 years. So since 60% goes as a receivable in your balance sheet, so every year whenever you do more work for HAM project and you compute increase and decrease, so on account of accounting aspects, the cash flow on a consolidated basis got negative. But I feel personally the way to examine the balance sheet is when you examine the balance sheets or financials of any EPC company, that is who is executing the work, the cash flow from operation should be positive, and Ceigall has already proved it. You can examine our financials for FY 22, 23 and 24. All the cash flows are positive.
A follow-up to that, there isn't going to be a big difference between standalone and consolidated numbers. Is that right to assume?
No, see, till the time the company holds the assets, EPC assets, it may be there. But as and when the monetization of HAM assets take place, you will be getting the two benefits to the balance sheet on a consolidated basis. Number one, the sale proceeds of the HAM asset would be added to your cash and bank balance. Secondly, the total debt amount, which also parts of the cash flow statements, this goes to the buyer. So you will be having a twin positive impacts on a consolidated basis. You would be finding it on this position to be further improvised as and when the any sale of HAM assets take place in future.
Okay, Mr. Singh, now I want to understand on the income statement numbers as well. Now for revenue guidance for FY25, you've guided for a 15 to 20% of a growth. I understand that in the last 3 years, you've been on a solid trajectory with a 50% of a CAGR as we discussed earlier. So considering that H1 was on the muted side with the various factors taking place over here, I want to understand that FY26 with the revival firstly happening in H2 and with more orders expected and execution taking place, what is this the number that you would be sustaining for FY26 and 27 as well?
We are basically a listed company and we have to follow some protocols. So on a conservative basis, we have already guided the annual growth rate of 15 to 20% in the top line. But yes, efforts are always there. We have a requisite material, financials and other resources which forms a part of a productive ecosystem which converts the order book into revenue. We always believe that as and when the land is available, Ceigall possesses the requisite resources to convert its order book into revenue. 15 to 20% is what is the guided number on a conservative basis. Actual number depend upon year to year.